Building a perfect stock option watch list. How professional traders find the best morning opportunities. Preparation before prediction, focus before execution, and liquidity before entry. The reason why you want to build a stock option watch list every morning, you never want to be a trader marking up your charts looking for stocks to trade while the market is open. You're doing yourself a disservice. The market moves fast, and the best setup happens the first 2 hours in the morning. That's when you have the most volume in the market. And then the next time is like the last 2 hours before market close. That's why I tell y'all I trade about 2 hours a day, because after those 2 hours, the volume go down. There's less participation in the market, and we need volume for stocks to move. So you don't want to be trying to build a list while the market is open or looking for stocks while the market is open. You're supposed to be prepared. When the market open, you're supposed to be prepared. You know what stocks you're looking at. You know what setups you want to trade. You know what levels you want to trade. You know where you want to set your stop loss if you're wrong. That invalidate the trade. You know where you want to enter. And you know where you want to take profit if you're correct. That's all you're doing when the market open. You just sit back, waiting for your levels to get hit, because you did all the work before the market opened, maybe the night before, and during pre-market. You've done all the work. The work is done in pre-market. You found your stocks, you found your setup, you see a nice candlestick patterns, you see some nice levels. All you got to do is when the market opens, just sit back and wait till those levels get hit. Professional traders prepare first. The watch list turns thousands of tickers into a few quality opportunities. Tickers are stock names. Like, what is Apple ticker? AAPL. What is Google ticker? GOOG. The ticker is the name of the stock. The watch list turns thousands of tickers into a few quality opportunities. The market has too many names to watch manually. A strong list removes noise. Your goal is a 4 to 5 clean candidate by the opening. That's your goal. You want 4 or 5 stocks by the time the market opens. Why most traders fail? Most losers start before the entry because the trader has no morning process. Looking at too many stocks, chasing news after the move, trading random tickers, trading low volume names, having no trading plan. Listen, people, in the pre-market, come up with your game plan and trade your plan. Don't start looking at some other stock once the market open, trying to develop a plan. Trade the plan you came up with in a pre-market. The goal: by market open, your job has already been done. You simply wait for your setup. Remove emotions, focus on quality instead of quantity, and let preparation create confidence. Step 1, start with the overall market. Before picking stocks, understand the environment the stock is trading inside. Remember, I told y'all we look at the futures market to get an idea what the stock market gonna do, because the stock market normally follow the future market. In the S&P futures, which is the E-mini, you'll type in /ES for the E-mini. That gauges the overall stock market, the S&P 500, the overall stock market. It's the /ES mini in the futures market. It is SPY in the stock market. They both gauge the overall market condition. Then you have NASDAQ futures, that's /NQ. This tracks the top 100 tech stocks in America. Pay attention to overnight movement, market sentiment, the economic calendar. Now, even though stocks have individual news or merger or something like that, they also have economic news that affect everything, the entire economy. So you have to pay attention to the economic calendar. And some of the things you want to pay attention to is FOMC, that's major news. You have CPI, PPI, non-farm payroll. Non-farm payroll happen every first Friday of the month. Then you have earnings. Earnings come in seasons. A lot of companies reveal their earnings and it move the market. Tech stocks might do earnings the second quarter. The health industry might do earnings the first quarter. Things like that. So pay attention to these things. Find stocks with high liquidity. Liquidity help with tight spreads, cleaner fills, and less slippage, and better option pricing. And that's normally stocks like Apple, Microsoft, Nvidia, Amazon, Meta, Tesla, AMD. These are some of the most traded stocks in the market. Every morning, you know these stocks gonna be lit. They're gonna have everything you need. All you need to find is the setup for these type of stocks, you dig? The Apples, the Microsoft, the Nvidias, the Amazon, the Meta, the Tesla, the AMD. They are tradable every single morning. They are very popular. Step 3, high relative volume. Relative volume compared to normal volume against today's activity. Normal volume is the baseline. Today shows the current attention. Unusual activity attracts traders. So when you see a stock that have unusual activity, like more volumes, something going on, they probably had a news announcement about that stock, and you need to find out what the catalyst was. That'd probably be a good stock to trade. More attention can create better movement. And step 4, news catalyst. News create a reason for volatility, volume, and urgency. Earnings, upgrades and downgrades, FDA approvals, product announcement, AI news, guidance changes, CEO announcements. All this affect the stock. Step 5, gap scanners. Gap ups and gap downs help locate stocks already moving before the bell. Gap ups mean the buyers are already active. Gap downs mean the sellers are already in control. The gaps create opportunity only if the volume confirms it. Avoid thin names with wide spreads. Pre-market volume. Stocks trading heavily before open often remain active during regular sessions. Heavy pre-market volume shows attention. Compare volume against the stock's normal behavior. Watch where volume appears around key levels. Do not force trades before the setup. Step 7, sector strengths. Sectors move together. Find the group with the strongest money flow. See, money rotate. This month, the money rotated to technology. Technology sector is booming. 2 months from now, it might move to the financial sector. So a lot of financial banks are moving up. 6 months from now, it could be the healthcare sector. You need to find out where the money is rotating to. You have energy, industrial, you have consumer discretionary, you have communication services, and you have semiconductors. But I'm gonna tell you right now, technology, semiconductors, the healthcare, AI, and energy, these are stocks that's booming. The financial boom too. So just keep that in the back of your mind. Option liquidity. A great stock setup can still be a bad trade if the chain is weak. Remember what I told y'all about open interest and volume. You never want to purchase a stock with low open interest and volume. If nobody interested in that stock, how you going to sell to close that trade and take your profit? You won't be able to because nobody's buying the stock. Also look at the bid spread. You don't want a wide bid spread, like about 20 cents. That's too wide. Implied volatility. That's the prediction of how much the market could move, but it won't tell you in what direction. Use limit orders. Remember, we talked about that. Market orders get you in a trade instantly. You don't care what the price is. You don't want to miss this trade. You want to get in instantly because the market is moving. That's a market order. A limit order, you're giving a market a price. I don't want to pay no more than this price for this contract. And a limit order is good, especially if you're buying 50 and 100 stocks, contracts. So use limit orders. And avoid contracts with poor exits. That go back to open interest and volume. Support and resistance. Your watch list is not finished until major levels are marked. The previous high, the previous low, pre-market high, pre-market low, daily support, daily resistance, weekly and monthly levels, round numbers and moving averages. All these represents key levels. All these are a representation of key levels. Market structure. Structure tells you whether price is trending, consolidating, breaking out, or pulling back. Higher highs, higher lows, lower highs, lower lows, trends, consolidations, breakout, pullbacks. You need to understand all of this, and we went over this in the training. Choosing only 4 or 5 stocks. Professionals reduce dozens of candidates down to a few names that deserve full attention. High volume, high liquidity, news catalyst, Good option, clear trend, relative strength, strong pre-market actions. And the more time you spend in the stock market, you'll get better and better at this, you dig? Give yourself some grace. You're not gonna come in here overnight making $1 million. We put in work for this. I've been in this game for about, 12 years now? Yeah, 12 years. It's gonna take time. Ranking your watch list. Rank each ticker so the best opportunity be priority number 1. You're focusing on volume, or you're focusing on news, sectors, liquidity, options, chart quality, catalyst, or the trend. I'm looking at this and this stock, but this stock right here is my main stock. That's the one I'm really watching. That's what that say. The opening bell. Do not trade immediately. Watch the first several minutes and let volatility settle down. I never hop in a trade soon as the market open. That is dangerous. That's a lot of false moves. Opening candles can be emotional. Spreads can be widened. Let the first move show intent. Wait for confirmation. Wait for your setup. No setup mean no trade. Your watch list gives you focus, not permission to force entries. Breakouts, pullbacks, reversal, trend continuation, flag patterns, and range break. This is what you're looking for. This is what you're looking for once the market opens. And as you can see right here, the market open at 9:30 is giving you a time example. 9:35. You should be waiting for your setup. 9:45. One stock will usually separate. Out of the 4 or 5 strong names, one often becomes the cleanest movement of the day. Do not force trades on every ticker. Find where buyers or sellers concentrate. Focus your attention on the leader. Trade the best opportunity, not the busiest screen. And risk management. A great watch list reduces bad trades, but risk rules keep you in the game. Risk only 1 to 2% per trade. Know your stop before entering. Never average down. Protect capital first. Premium could go to 0. Now, I should have changed this a little bit, because I normally risk about 5-10% on my trade. I ain't gonna lie. I guess it's come with experience, but you do want to manage your money right. I say 1 to 3% at least, you dig? So your daily routine, build the list the same way each and every morning so execution become cleaner. At 6 a.m., review futures. At 6:15, look at the economic calendar. At 6:30, look at the AM news. At 7 o'clock, look at the gap scanner. We're going to talk about scanners. At 7:15, find sector strength. I'm going to show you how to find the sector strength. At 7:30, build the watch list. At 8 a.m., draw your levels. At 8:30, finalize your top 5. At 9:30, wait for confirmation. 9:35, wait for setup. 9:45, focus on the leaders. And 9:50, confirm your risk. Now, you don't have to use these timestamps exactly, because nobody knows if the market going to move at 9:30 or 9:45. We don't know that. Sometimes the market might move early, sometimes it might move late. But this is just an example of how you should do everything every morning. The best traders don't find trades, especially when the market open. They prepare for them in the pre-market. Preparation, patience, discipline, risk management, and consistency will make you a great trader. And protect your account at all costs. Always be protecting your account. The charts need to earn your money. So this is how you build a watch list. If you have any questions, of course, you could hit me up if you know how. It's your boy Leo. I'll see you in the next video. We almost at the end, people, but I'll see you in the next video.